Hi guys, Trader Michael here, and in this video I will talk about the strategy called Profit Parabolic. And this strategy is a combination of the parabolic SAR indicator and the 3 simple moving averages. And I have done also the backtest of 100 examples on this strategy, so I will share the results later in the video. So now maybe let's talk about about this strategy. What are the conditions to enter the buy and sell trade, and how it is built. So the parabolic SAR indicator was invented by one of the most popular authors out there, Mr. J. Wallace Wilder. And it's not a lagging indicator, basically it's a price prediction indicator. It tends to show one step ahead of the price movement, because I will not explain the formula, but basically it has one parameter in it that is set to predict the future price movement, either up or down. That is about the parabolic indicator, and the 3 moving averages are with the 5, very short one, period, 25 and 50. I will show you in the settings. You can see it's a length of 5. This one have 25, and this one have 50. So basically this strategy is a combination of those 4 things. Basically what you see, this moving averages shows some channel of the price, some trend channel, and the simple this short simple moving average is our indication for the entry level. So now if we know the ingredients of this strategy, let's check what are the conditions to buy and sell and how to use it, of course, right? So we have this situation right here. This short simple moving average is showing us the entry level, which is when the simple moving average is crossing the other two, the lowest, the 25 period and 50 period. In this example, it will be short because it was crossing from the upside to the downside, and the parabolic SAR is above the chart, which means on this candle, because this one indicates the crossover moment, it closed here, opened a new one here, and that would be our entry level. So we open a short position at this moment. The stop loss, as the author of this strategy says, should be above the local high or local low, depending on the side of direction of the trade, and the take profit level should be at 20 points, 20 pips level. So as you can see right here, the risk reward ratio is not that good, which as many of you I don't like, but I tested it. The profitability is quite good. This strategy made a profit, and later you will be the judge whether it is a good strategy or not, because I will show you how I also modified it a little bit, because most of the time this strategy was not stopped out on the level that for example spike here or something. The trades weren't stopped out by the stop loss level. I also agreed to exit the trade when the conditions were met for the opposite trade. So for example, we had this and we entered here. For example, it didn't take the profit, the price goes further, and the short moving averages crosses again the other 2 moving averages from the bottom to the upside, and the parabolic SAR indicator is below the chart. That indicates for us a buy trade. So therefore in this situation that was for me the closing point for the short trade and the entry level for the new buy trade. So and eventually that caused the level of where we were stopped out it varied very much from the level that you see here. The risk reward ratio in these examples were quite good. Sometimes it was like 1 to 2 or something, but most of the time it was more or less 1 to 1. So as you can see, it's not that bad as it seems on this particular example. So maybe let's check a buy trade example. A good buy trade, of course, it needs to be profitable for the sake of this video. So guys, let's check this one here. We have the simple moving average crossing from the bottom to the upside, and on this candle we would open the trade. On the opening of the red one, long position. Now this one will not be. Oh no, it was. So we set the take profit for the 20 pips and the stop loss for the nearest lowest low, which is right here. As you can see, right? This is the lever for the stop loss. Maybe with the rectangle will be better. Right here would be our stop loss, right? And as you can see, the take profit was executed in this particular example also. So there is also one thing I need to mention about the backtest I did. For example, if the situation occurred like here, later we took a profit, but the yellow simple moving average, the short period one, didn't cross both of the other two simple moving averages below, but it stayed above or was all the time in the between them, in the middle. So when the situation occurred like here, the simple moving average crossed again the longest one, the 25 period, and the parabolic SAR was on the right side. So in this particular example right here, I was also entering a trade. I was also taking it into account when doing the backtest. So as you can see, again, we could say that would be our stop loss, our entry point and take profit was again executed. Risk reward ratio, not the best, but the profitability is quite high, and in fact it did make a profit, this strategy. So now maybe let's switch to the Excel. Okay, so we now have the spreadsheet, and as you can see, it was followed by 100 examples. 101 because the first column are the names. So I did the backtest. As you can see, every take profit is 20 pips, and the stop loss, the exit point when there was a loss, it varies because it depends on the stop loss level and on the, for example, the thing that we had the opposite signal, so I had to close, for example, short and open a long position. And the period of this backtest is only 3 months. So as you can see, it's kind of a scalping strategy. It gives good amount of signals, so you have what to work on. And as you can see, for example, right here we had the minus 26 pips, but over here 19, 13, 24, 7. There was a point where I had a 2 pips loss, because it gave the signal in the opposite direction and I had to open the exit position. So I keep the risk strict, the risk rules very strictly to have the best stats for this strategy. And as you can see, there was 74 winners, 26 losers. The winners gave 1480 pips and the losers were 757 pips. And the result was 723 pips in profit. So for example, if you would trade with one lot per trade, the volume of one lot, it would give you $7,230. It is a gross profit without the paid commission for the transaction. I didn't take it into account because it varies from the broker. So as I told you, it is for 3 months, so you can divide that and check the profitability for one particular month. But those months were, it varied. As you can see, we have, for example, right here, 10 transactions, and after that 1 loss, then again 7 transactions, but then we had the series of 3, 5 stop losses triggered. So you need to be prepared that, for example, this kind of situation where you will have to 5, 6, maybe 7 times in a row exit the position with a loss. But as I said, it not always will be the risk reward ratio as I showed you on the platform point something, but for example here it was 7, 13, 19, here was 66, but there was a moment where we had, where was that? Yeah, right here, 2 pips. So the last thing, guys, that you need to do before trying this strategy, you need to make your own backtest. You cannot rely only on my backtest because I traded it, I tested it on all available time from the Monday to Friday evening, and it is not possible for you to stay awake 24 hours, 5 days a week, right? So you need to test it on your trading sessions and then check if the profitability would be around the same or similar, and is it worth it to check on a real account. So that being said, guys, I hope you enjoyed the video. I'm waiting also for your comments and your suggestions about the strategy down below. Also, you can check the Telegram group chat, or you can join the social trading platform and write me directly on the chat. So big profits, guys, and see you in the next one. Take care. Bye.